Okay. Um, okay, let me just change the chat settings so that everyone can type in the chat. Okay. First things first, can everyone hear me? Okay. Okay. Um, okay. Hi, Jacob. Welcome to today's webinar. So, yeah, I think we'll go ahead and get started. So, for today's session, we're going to be looking at the different charts, and we're going to be analyzing these charts on the spot together. So if you have any chat requests or any questions throughout the meeting, you can feel free to pop them into the chat or into our Q&A section. So, okay, let me just share my screen. Okay. Can you see my screen? Okay, it should be fine now. Okay, so hi everyone, welcome to today's webinar. I'm Melanie. So before we begin, disclaimer as per usual. The information expressed in this presentation are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes and they do not constitute investment advice and or consultation on how clients should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. So, trading margin FX and CFDs carry significant risk, not suitable for all investors. So you're kindly advised to read the relevant documents and understand the risks before deciding to trade. And do your own due diligence as well before trading any of your money. Okay, so here is our team. We have Desmond, who is the CEO of Everest Fortune Group and our chief trader. Finalists for Best FX and Equity Research in 2019, 2020, and 2021. Okay, let me just stop sharing and open up my trading view. Okay, if you have any requests or any questions for me or any charts you'd like me to go through, you can feel free to pop them into the chat. I will be keeping an eye out on all of the questions in the Q&A section and as well as in the chat section. Okay, so let me share my AUD Sure. Let's look at that first then. Okay, let me pull up my charts and share my screen just a second. Okay, we should be able to see my screen now. Okay. Let me clear everything. Okay, here we go. So Okay, so first things first, before we start analyzing, I like to look at different time frames so that we get a general sense of the direction where price is heading to. So let's start with monthly. So on the monthly time frame, we can see prices have been dropping. On our weekly, we see prices dropping as well. And we actually have a descending trend line here. Right? So if we take a look at daily, you can see prices are kind of ranging. So here we have a swing high here, swing low, and another swing high. So you can see prices ranging. So we typically like to analyze on either the 4-hour or the hourly time frame. So here's our 4-hour time frame. You can see price is moving in a descending trend line. Let's see if it's moving in a descending channel. Okay, not quite. But we know that it's moving in a descending trend line. So how do we know if this is a valid trend channel? Um, what we want to do is we want to make sure that prices are touching the top of the trend channel twice and the bottom of the trend channel twice as well. But in this case, it's not, which is why we wouldn't consider this to be a valid trend channel. So let's go ahead and remove that. Okay, so now let's take a look at our hourly time frame. Okay, I think I will be analyzing on the 4-hour time frame today, mainly because you can see prices are ranging more on our 4-hour time frame. You can see a clearer movement in price compared to our hourly chart. We typically stay away from the 1 minute to 30-minute time frame, simply because there tends to be quite a lot of noise for these time frames. So for example, here we have the 5-hour time frame, and you can see there isn't really a clear movement in market price. Yeah. So let's take a look at 4-hour. Okay, so I'm just gonna draw our descending trend line like we did earlier. So first thing we will do is identify the general trend of where price is heading. So we always want to follow where price is heading towards. So now we see that price is moving in a descending trend line. So we're gonna have a bearish bias on our Aussie dollar. Okay. So now that we've established the general direction, let's go ahead and add some support and resistance levels. So as a general rule, we typically put our support levels at our nearest swing low to where price currently is. So price is currently over here at the 0.66530 level. So I'm putting it over here. We can see price tested this level a few times. This will be my first support. So what we like to do, or what we try to do for support levels and resistance levels, is that we try and pull it back all the way back. So here you can see I have another swing low over here. If I pull it back, let's see if okay, yeah, that's about it. So why we want to pull it back as far as possible is so that you can see how significant this level of support is. So if you can see price has tested the level many times before, then you know that it's a very important support level to take note of. In this case, we see price recently tested it and has tested it once in the past. So there's a possible, actually, we see over here that, let me zoom in. price has also tested here recently. So this is a pretty significant level to take note of. Okay. Okay, let me clear my drawings. Okay. So now that we have our first support level, let's look for resistance levels. So for resistance level, same thing, but in this case, we typically look for a swing high that is closest to where price currently is. So that will be over here. Same thing, we want to pull it back as far as possible. So here, we're going to pull it back here once. You can see price bounced off of this level once, and you can see price reversed off of this level recently. So this now makes it a overlap resistance, which is also a pretty significant level. Let's see if we can pull it back even more. Okay, if I put it here, this wouldn't be a very good level, or you typically want to avoid instances like this. Why? Because you can see here that we are cutting too many bodies of candlesticks. So it's all right. Let me zoom in so you can see better. So it's all right to cut through just the wicks of the candlesticks, but in this case, because I'm cutting the bodies of the candlesticks, so you want to avoid that. So I'm just gonna leave it here. I'm just gonna leave it here. Okay. So because we have a bearish bias on our Aussie dollar, let's look for another second support, which will be our take profit. Okay, here. So why did I choose this area? And you can see actually now I am choosing an area more than the level over here. Reason being that okay, let me just label this first. Second spot. Reason being that if I zoom in, you can see that price reversed off of this area at the 0.65232 level many times before. So it's a very significant area over here. So now what we're going to do, since we already have our support and resistance levels, we want to pull out some Fibonacci levels to support our analysis. Okay, so let's start with retracement. Okay, so you can see my 23.6% Fibonacci level lines up nicely with my first resistance. So I'm going to just keep that. Okay, over here I have a bit of, let me draw a video. I have a slash symbol over here, right? So we are expecting price like that. So price could either continue here or it could drop here, right? So how do we confirm this? We will let's pull out some Fibonacci levels. This is also a flash kind of shape. So for this shape, we can make use of some Fibonacci levels. Let me just clear my drawing off. Okay. Here. Okay, here we can see my 78.6% lines up exactly with my first resistance. I'm gonna keep that. Okay. So with that, we can see that if price does continue to go up, it's likely to bounce off of our first resistance because we have so much confluence in this area over here. Okay, but in this case, we are expecting price to continue moving in our descending trend line. So only if it breaks out of this trend line that we can expect price to reverse off of our first resistance. Okay, so okay, so now that we have our Fibonacci levels, let's pull out some indicators to support our analysis. So I'm going to use Ichimoku first. So you can see for Ichimoku normally, there will be all of these lines that will show up. But we typically like to only use the clouds because at one glance, you can see exactly what the indicator tells you, whether it's a bullish or bearish signal. So in this case, let me move on. We can see price is moving within the bearish cloud over here. So we will only go in for the sell if price is moving below the cloud, or going for a buy if price recently broke out of the cloud or is moving above the cloud, because then it will give us a bullish signal. So in this case, since price is moving within the cloud, it doesn't really tell us anything. So I'm going to remove that. Let's take a look at MACD. Okay, over here, MACD is showing us a negative, or rather a red area, which suggests a bearish signal. So it lies, or it supports our bearish bias. So we can keep that. Another one we like to use is stochastic. So now let's take a look at stochastic. Let me close my MACD. Okay. So if we take a look at stochastic, we have what we call a hidden support level over here, right? So on our stochastic, prices have been moving along this support level. It's been bouncing off of this horizontal support level, right? But if we take a look at the exact same time frame on our price chart, right, we see that prices have been dropping over here. And it's only recently been following this support level at our first support. So what does this tell us? It actually tells us, or this is okay, first things first, this is a bearish divergence, aka it tells you that prices are likely to continue in a bearish momentum, right? And we could be seeing a bearish breakout from here, which we did see over here. So prices could continue to drop. Just looking to see if you can see anything else from stochastic. Okay, this isn't, I'm looking for a resistance, but because prices don't really touch here, so let's not look at that. So here we have a hidden bearish divergence, which also supports our bearish bias. Okay, now let's pull up another indicator, RSI. Okay, so if we take a look at RSI here, between here and here, you can see prices remain kind of constant over here. They've been moving along our first support. But if we take a look at our stochastic, we see that prices are making a higher low. Now this is called a bullish divergence, which could tell us that prices are likely to continue to move upwards from here. But however, if we zoom in, you can see that recently prices have already made this upward movement. So we can disregard this this bullish divergence. So in this case, we can remove our RSI because it doesn't tell us much right now. Okay. Okay, and here are the indicators and our final. Let me just clean this up for you guys. Okay, yes. So here's the final look at our chart analysis with our two indicators. So there are a lot of indicators that you guys can use, but we typically stick to these four because they each use a different kind of signal to tell us. So if you have 2 out of 4 signals that tell you that it's bullish or that support your analysis, then you can go in. The probability of your analysis being accurate is of course higher. And of course, if perhaps in this case, like 2 out of 4 of the indicators that we chose support our analysis, then we could wait a little bit longer to see if there will be any breakouts. So for example, if I zoom in here, we could see a breakout. You could wait for a breakout of the descending trend line, or you could see if prices will continue within the descending trend line before you make your move. And at the same time, you can also make use of the 4 indicators because of course they are always moving. So you can make use of that once more movement has been made and more price confirmation has been made before making your trade. Okay, I hope that's clear. Okay. Do you guys have any other requests? No problem, Jacob. I hope that helped. Do you guys have any other requests or any questions at all? Okay, if not, let me just check the Q&A as well. Okay, if not, we can go ahead and analyze another currency pair. Let's go ahead and analyze DXY. Sorry. DXY. Okay. So similarly on our DXY, we're gonna start off. Oh, let me remove all of my indicators. Okay, let's take a look at monthly first. Okay, we can see prices have been moving in an ascending trend line. Okay, not quite. So for an ascending trend line, what makes it valid is if it has three significant touches. In this case, it's not. But yes, so we will not include that. So let's take a look now. So monthly, we see prices beginning to drop. Okay, weekly, you can see prices making a sharp drop as well. Okay, on this we see prices dropping as well. So I think we can have a general bearish bias towards our DXY. And on our hourly, we see prices dropping as well. Okay, let's do our analysis on our DXY. Okay, so first things first, we're gonna have a general trend. So we're gonna look for trend lines or trend channels. In this case, there is no trend line. Let's see if we have a trend channel over here. Okay, so here we have a descending trend channel, right? Two significant touches on top and two significant touches below. Okay, so now that we've established that, we can go ahead and plot our support and resistance levels. So for support levels, we pick our closest swing low to where price currently is. So price is currently here. So I'm going to place it over here. But I can push it back. I can pull it back even more to just over here where the candle wicks, the wicks of the candles are. And label this for support. Okay. Let's see if we can pull it back even more. Okay, no. So now we're looking for resistance levels. So you're going to put it at the closest swing high to where price currently is. Okay, I think I would highlight this level. Okay, so I will highlight this level because you can see prices don't really they don't really match up, but you can see that price has been testing this level a few times in the past. Can I push it back here? Okay, making it an overlap resistance, which is a important level to take note of. Okay. So for my second resistance, yeah, I'll put it over here. Okay, why over here? Because you can see that I have a swing. I have a swing over here, and I have a swing high here. So it once again makes it an overlap resistance. So in this case, I was like, since we are expecting price to continue moving within the descending channel, our second resistance would be our stop loss, and our first support would be our take profit. But in this case, we're just identifying support and resistance levels first. When actually trading, you would want to make sure that your entry, stop loss are closer together and ensure that you get a better return based off the ratio. Okay, let's go ahead and pull out our Fibonacci levels. So for retracement, Fibonacci retracement, we use these 5 levels. So you can see here my 78.6% Fibonacci retracement lines up nicely with my second resistance. So I'm just going to keep that. Okay, and then here we have a projection. So for projection, we use 61.8, 78.6, as well as the 100%. Okay, here. Okay, we don't have any levels that line up here, so we can go ahead with that. Okay, I think that's about it. I do want to highlight another level over here. Okay. Why? Because okay, yes. Because we have one swing low over here, another one over here, and then a few over here. You can see price testing this level here before pulling back. So in this case, we are expecting price to pull back to this same level over here, but at 104.124. So that's, I guess, an intermediate support level that we can take note of. So if we're going for a sell towards our first support level, we could expect, or we could wait for price to break through this level first at 104.124 before going in for a sell towards our first support. Okay, I hope that makes sense. So now that we have our Fibonacci levels, let's go ahead and pull out some indicators. Okay, so on our Ichimoku, doesn't really tell us much here. Price is moving above our cloud, so it could be a bullish signal. However, where price currently is now, it's not really, it's kind of between the two clouds. So we're going to remove that first. And then MACD. So MACD, you can see there is a red area, which tells us that it's a bearish signal. So we can keep that. And then for stochastic. So of course you can use any indicators that you want, but we're just using these as a, because these tell us different things. So we just like to use these for. Okay, so let's highlight this area. Okay, so on this horizontal area, this horizontal support, once again, we have a hidden support level. But in this case, on our price chart, price made a lower low. So this is a bearish divergence, and which also tells us that price could continue to drop, which supports our bearish bias. So we can keep that. Let's pull out RSI. Okay. So if we take a look on our RSI, we see an ascending trend line, right? However, if we look at our price chart, prices are kind of dropping here, stayed the same, and then is going up. So in this case, this bearish or this bullish divergence, once again, it already occurred, right? Because we see that over here, if we play this, over here, we are expecting price to continue to rise because of this bearish divergence here, or bullish divergence over here. But if we play it, we can see price did continue to rise. So that is, this bearish divergence is already over because it already happened. So we can go ahead and move that. Let me show you the two indicators again. Okay, yeah. So here are our two indicators as well as our analysis. Okay. Do you guys have any questions or any other requests? Okay, gold. Let's go ahead and do gold. Okay, yeah. Okay, so we're just gonna repeat the same thing that we did earlier. Take a look at monthly first. Okay, we see that we have this resistance level here at 1920. On our weekly time frame, prices are seemingly moving, heading back up to that same resistance level over here. Okay, on our daily time frame, we see prices could be dropping a bit. Okay, on our 4 hours, we see prices rising, perhaps towards this same resistance level here. Okay, so we have, if we want to continue in the trend, we have a bullish bias towards gold. Okay, let's see if we have a ascending trend channel. Okay, no, but we can all agree that prices are rising. Okay, so let's go ahead and plot our support and resistance levels. So same thing. Okay, yes. So I can pull back my support level all the way back here. So to be my first support. For my resistance, it will be closest to where price currently is, secondly, if first resistance, sorry. And then if we take a look here, we have a swing high, which will be our second resistance. Okay. Actually, let me see if we have Mr. Shani first. I'm going to see if we have any questions on our other platforms. Okay, no requests. Yeah. Okay. Okay, here we go. So if I zoom in here, we can see if we have any retracement levels. Okay, doesn't seem like it. Okay, in this case, let's just go straight into our indicators because we don't have any Fibonacci levels here. Let's see if we have a projection here. Okay, no. Okay. So let's take a look at our indicators. Here we see price moving above our Ichimoku cloud, which gives us a bearish bias, which supports our bullish bias. So let's take a look at MACD. On a MACD, it's showing us a red area, which gives us a bearish signal. So we can that. Okay, and if we take a look at RSI, we can see prices are moving in an ascending trend line as well. Okay. Okay, so let's keep that. Now let's take a look at stochastic. Okay. So for stochastic, we see that price has kind of dropped a little bit from this area. Let me highlight it. Okay, but we see that price is moving upwards and has made a higher low. But in this case, on stochastic, it shows us that it's made a lower low. So this is a bearish divergence, and it could suggest that price will drop from here. So we can remove that because it doesn't support our bullish bias. Good. Okay, yes, here. Okay. Oh, sorry. So if we zoom in, oh, just a second. What happened? Sorry, just a second. Let me try and figure this out. Okay, yeah. Okay, let me just share my screen. Sorry about that. Okay, here. So if we zoom into recent prices, actually, do we have a trend channel here? Yeah, okay. So we zoom in here, we can see that there is a little bit of a support level here, an intermediate support. In other words, breaks, um, if price continues towards our first resistance, then of course it supports our bullish bias. However, if price reverses and it actually breaks out of this blue dotted line, which is our intermediate support level, then that's pretty significant because we know that this would then be a breakout. Okay, clear this. And we can expect price to continue to drop if it breaks out of here. Because this level, we see that it has a swing high, sorry. And then here, price has recently bounced off of it, thus making it an overlap support level. So if it breaks through again, it will then make it a pullback resistance level, and then we can expect price to continue to drop after that. Okay. Do we have any other requests or any other questions? Okay, if not, let me just see if we have anything else. Okay, if not, sure, actually we can quickly take a look at Brent oil in this case. Okay, let me quickly pull up my charts. We can do a really brief one in this case. Okay, let me share my screen. Oh, not for today. Okay, sure, no worries. We can do that next week. So on next Tuesday, we will be looking at support and resistance levels. It'll be part 2 of the series. So we'll be looking at trend lines, trend channels, and how to incorporate support and resistance levels as well as Fibonacci levels together in order to create confluence. So that'll be for next Tuesday, and then for next Thursday, it'll be the same thing. We'll be looking at some of your requests for charts, and we'll definitely be looking at Brent oil and natural gas as well, since you've requested it. Okay, that's great. Okay, thank you guys so much for coming today. I hope you guys learned something, and I'll see you guys next week. Have a great weekend. And stay safe and see you guys next week. Bye. Bye, Rosen. Bye, Jacob.